States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Chris. Hey, Chris, how you doing, man?
What's up, Nick? How are you, man?
I'm good, and happy Monday to you. We got stocks lower here this morning. Is that just seasonality? Is seasonality just coming right off the bat? Are we just gonna melt lower for the month of September? I know you've got some thoughts on that as well. So what are they?
I am thinking that seasonality is certainly a part of it. August was a crazy month, man. I mean, August 1st, 2nd, 3rd, huge downside. They spent the rest of the month clawing back. We finished at highs. Literally Friday, like Friday afternoon was just that last little push, but not quite enough to get to, the previous all-time highs. So we were right there, just a little bit shy in the S&P, still a decent chunk away from the Nasdaq. The Dow made 3 all-time highs in the last couple of weeks, and the Russell still hanging in there. So, I mean, the charts are pretty simple. Let me just share my screen here. I think that we are looking at a range that continues to play out. So I'm going to get some trades in here, Nick. I've got some long puts that I want to work through. I just got filled for a $3 debit. I'm trying to get filled. It's probably going to go up a little bit higher. Right now, this is a SPY trade. So trading at 3. Let me see if I can get 305 for this. So let's go similar. I'm going to try to get a 305.
While you work on that, Chris, I'm going to just talk through some of the things I'm seeing too.
Okay.
So couple things I'm seeing, as Chris just mentioned, Dow Jones took out the highs. It's the only one of the indices that is currently getting a positive score here on the Edge Finder. Dow Jones still getting bullish. What's interesting to me with the Dow is, here we go. We're entering into a phase. We are literally like the plane is starting to land, right? We are descending for landing. And what I'm talking about is the Fed's rate cut stuff, right? So I actually thought this was very interesting, and some of you may have heard this before too. During a soft landing, what has historically, during a period of time where the Fed has actually cut rates, what has actually done pretty well is value companies. And value companies are what the US 30 or the Dow Jones is all about. It's all about the big, stable, boring companies. And that typically has had a pretty relatively good performance during that time. So I am interested in the Dow Jones. I'm very impressed that it's so still near the all-time highs and that I was able to reach those all-time highs, as Chris just mentioned, despite the bounce back. We didn't quite see the S&P take out the highs. We didn't see the Nasdaq. NASDAQ is still, from here, guys, we're talking about a 7.5% move still to get back to the highs. So NASDAQ's looking interesting. The Russell also, very far from its all-time highs. We still got room there. But some things to think about here is that if you're watching like I am, things like IWM, the NASDAQ, the S&P, I'm bullish on these things, but I like to say something we say frequently on the show, which is cautiously bullish, right? You should probably just put cautious in front of any opinion you ever have in the markets, and then you're going to be better off, like cautiously bearish, cautiously bullish. But I do genuinely mean that when it comes to these indices, I like the upside move potential for things like the S&P 500, but I'm not married to it. I'm not investing right now. These are not investments. These are trades. And so what that means is that I trade out of them if they don't act the way that I'd like to. The beautiful thing about being a trader is you're not subject to, buy, hold, and close your eyes and pray that it actually goes the right direction. Because the cool thing about trading is that the biggest advantage to trading is that you can employ some timing, which is easier said than done. But if we take out these lows, let's just say, this would be one of my favorite scenarios, would be if we see this market come down to support and just break it through, take out my stop loss, and then trend all the way down, and I can pick it up at lower prices again, that would make me feel very good, because then I just played the market very well, right? So that's where I'm kind of looking at this, and I'm saying I'm watching the market skeptically, as Chris just mentioned. We're in a bit of a consolidation zone here. We very well may stay in there. You might see this thing just go sideways for the week and up until NFP, and then maybe we get a bit more decisive move. But if we break these lows, it's time for me to take profits and stand to the side, especially with such a big question mark at the end of the week with that NFP report. Is that a good summary, Chris?
It's very fair, and I've got the micro E-mini futures up right now. I put on some trades last night. The nice thing about getting in too, obviously we had a holiday yesterday, so U.S. markets were closed, but I started to look out a little bit further. I'm trying to trade some of the seasonality. MES is it's a lot cheaper than trading ES. It's a lot cheaper than trading SPX. Plus, it's still open, so it's not quite as liquid as ES. But basically, what I did is I stacked up some seasonal long puts right here that I went out to November, which is probably more time than I need to go out. But for me, if we go, you can see here I have like the bear stack 11:15 expiration. So I'm just looking right underneath this current support, and I mean, we either, like you said, Nick, stay sideways where it just chops around in here, and then NFP is what possibly, breaks it loose one or the other. Look, I read an interesting piece this weekend that also suggests that we might be still looking for capitulation of the upside just based on just a straight up debt spiral where the Fed has nothing else to do but cut rates, and it's just going to make the market melt up even higher. I mean, again, I'm trading both ways, so I'm not really on one side of it. But expiration wise, these highs are out to February of 2025. Okay, and then these lows are out to 11/15 of this year. So if we stay sideways, I mean, technically, I would like to see a little bit of a pullback. Historically, September is a terrible month for stocks. And so if we break the floor, then sure, it makes sense to me that we pull back in this area. We have some good structure around this 5,400, 5,450 zone on the MES. That would be the equivalent on the SPY if we were to break this yellow box and head down to fill this gap at 545 or head down to this previous level around 540. So those are my two levels where if the bears can break out, we're likely coming back into 545 or 540. That would be where I'm looking to resume long positions. And from there, be a little bit more, I'd say, longer term, medium term of, 3 months, 6 months, and then looking to see if we get that run to, 590 to 600 by the end of the year. So one thing that is noticeable is everyone's wrong. Like every Wall Street analyst, every investment bank, every forecast has undershot where we are currently sitting on the S&P. And they just keep changing targets higher and higher and higher. And I'm curious what those, newfound projections look like, because some are probably projecting current price and will just stay here for the rest of the year. Others are projecting still that maybe 590 to 600, I'm talking S&P, gets hit, or we possibly, stay right in the middle. So again, it's a guess, and I'm just trying to figure out, what makes sense in the near term. To me, seasonality, employment news, CPI news, all the stuff that's coming out before the Fed rate decision, the market's going to digest it. So for me, there's not really a lot of action here, and I kind of hate it because I'd like to do something. But
Sure.
the best part right now is probably to be patient and just wait and see what price wants to do.
Here's a question for you, Chris. I
Yep.
was talking this to Ivan. Just maybe the chart of the day is oil. I mean, oil is absolutely ripping lower here. You got down 4% after a few weeks of a lot of damage on the oil price. So here's a contrarian question for you, because obviously the easy answer here for me in the short run is like, oh, I see the bear case, right? You've got potential slowing economies, you've got inflation coming down. It's not great for commodities. But if you're a soft landing believer, which I am, is there a possibility that you could scoop up on a contrarian basis oil, or maybe oil, like stocks, maybe like Exxon, Chevron, maybe some names you could pick up if you get a big slide in the oil price? with the idea that if you get a actual soft landing, if that does actually happen, you're talking about companies with very low price to earnings, very very good pricing compared to other places in the market. Energy stocks typically do have cheaper valuations, but then also the idea that if you get a reacceleration in the economy, that the demand for oil could come roaring back. Not to mention, you may have OPEC, which I know has contributed a little bit to this downsell. They've started talking about increasing supplies, et cetera, yada, yada, yada. But if they at any point don't like the price and they constrain oil supplies, which they are notorious for doing, I don't know. Are we getting into a point where there's a place to put some oil stuff in your account? What do you think?
I do have oil in my account, yes,
Mm-hmm.
and it is. Let me see here. So I'm looking at just trying to stay out of the way. I think there's some decent support. I mean, I'm not sure if oil is slowing primarily from slowing demand. I mean,
Mm-hmm.
China continues to be something that's lagging like crazy. I'm just going to check on a couple things. I put in a 555 long put. So if that level gets hit this morning, I'm likely going to take some profit on that 555. Let's go to oil right here. So yeah, dropping a ton. I mean, it's just been in a steady downtrend really since July. Support to me sits around $68, 67.50, maybe 65. I like some oil exposure, probably through options, probably through credit spreads. Nothing crazy. Not trying to pick a bottom or anything. But I'm looking to see if we bounce off those levels and just maintain what's been pretty supportive since 2022. I mean, even in a bear market, Nick, 2022 was still pretty darn supportive.
Sure.
Given what we have going on in the Middle East, I'm surprised that oil is dropping the way that it is. Outside of it's a global demand slowdown as opposed to, I mean, every major producer in the Middle East is looking to scale back, cut back production, try to manipulate supply and demand a little bit to keep things afloat. But I'd be pretty firm on like trade some options at the lows to get long with stop losses, with maybe 65 being the stop area, and looking to see if we can bounce there. But I think it's still a range between 65 and $95.
Here's one thing that I think is interesting to watch on oil is the last time that we got deflation to any varying degree. Obviously, the easy one is 2008, right, where we actually
Mhm.
saw uh, prices falling because demand was so bad. But there was a brief period in 2015 where inflation went all the way down to zero and actually dipped negative, which is usually a very scary time. A lot of people, I had somebody on Twitter I was fighting with, Chris, somebody was like, no, I want deflation because I want prices to go down. And I was like, banging my head against the wall because I was like, do you actually know what you want when you say I want deflation to happen? Obviously, everybody wants prices to be lower, don't get me wrong, but do you
Mhm.
also want it at the cost of your job? Do you want it at the cost of the a debt crisis potentially happening,
Right.
which would ruin the standard of living in the United States? Like, yeah. Anyways, that's Twitter drama for you. It's a waste of time, anyways. But in 2014, 2015, global economy concerns started happening again, and we saw oil drop massively. Went from $107, $108 a barrel, which is much higher than where it is currently, down to like 25, 26, which is crazy. But that's the question: is if you're somebody who is more like, oh, we're gonna have a hard landing, I get it. Then you're talking about like, oh, huge slide for oil prices could be coming. But if you're not, if you're more of the soft landing camp, um, oil prices could be looking low. So uh, keeping an eye on it. I think that there's maybe some individual companies I could buy her for the longer term. Maybe Exxon or Chevron. I'll keep an eye on that. But just wanted to ask you. I think that's kind of like our chart of the day. Other chart, I guess most people are interested. Gold's coming all the way to break even for me, which is no fun, but part of the game. What are your thoughts on oil and silver right now? Or, I'm sorry, gold and silver.
Yeah, I think they're due for a pullback. I mean, we've had a good run on gold. It's been really choppy here the last 8, 9 trading days. Starting to turn over just a little bit. I mean, it's not doing any major damage. The lows
Mm,
I'd be watching, it's not this that I'd be watching as much as it would be if we take out this low. So if we pull back here, there's still higher lows to potentially show a bounce. But as we mentioned before, I mean, this level around 2280 is pretty strong support. Just look left. I mean, we have really solid trend line support that goes back to this whole trend starting.
mm,
Um, I don't know. I mean, I'm longer term gold as opposed to it's got to be bullish right now. I mean, it's been bullish. It's at all time highs. What more do you want? Like
Yep.
let it pause, let it pull back. You give yourself a chance to buy something lower. And for me, I just think, let's see how this settles. Look at a trend line break, wait for this to stabilize once again. Maybe it hits 24, maybe it's 2360, maybe it's testing these lows. But if we have a opportunity to buy here at 2300, 2280, and you bounce, you got a stop loss there, you go to all-time highs, and off you go. Silver, on the other hand, silver pulling back a little bit sharper. I was, well, I mean, it's still pretty well supported off this $26 resistance.
Mm,
And we'll see if this level, I mean, this really to me is an important spot. Again, there's trend line support back in here, but because of this breakout, I would still like to see silver kind of choppy in here, not necessarily breaking below 26. Once we get above this level, then I'm way more bullish towards that first target at $35 and change. So I'm
yeah.
going to see if silver can just stabilize, not necessarily pull back. Gold, on the other hand, could pull back just because it's sitting all-time highs.
Yeah. No, I think that's right on. And the thing with our conversation about oil a moment ago and silver is kind of one and the same. You could throw copper into that too. As there's a little bit of concern, global economy. So I mean, look at copper down another 3.5% today. My goodness. So
Hmm.
you have the demand for uh raw materials
Wow.
potentially lowering, but also just the inflation story cooling is not necessarily a really positive one for commodities. That being said, again, I'm kind of more in the camp that I'm looking at it, Chris, as a possible contrarian trade for 2025 would be to start looking at scooping up or maybe even dollar cost averaging on some commodities that I like. I do think that the market is hating them right now because they're like, oh, inflation's gone and consumer growth or economic growth could be really challenged. So get rid of commodities. I get that on paper, and for a trading perspective, short term, that makes sense. But I think that things, as very well, Chris, markets can get overdone in one direction or the other. So I think it might be a fun contrarian thing to toss around. As we close out the year in the next couple of this last quarter.
Yeah, if we see a big drop in commodities, I would think that if we go commodities dropping, let's just say there's kind of a worst case scenario.
Hmm.
Commodities drop, stocks drop, everything looks nasty. Um, I don't know. There's so much news to digest the next couple of weeks. I mean, it's hard to make that decision.
Yes.
Um, but I mean, price wise, look, if oil is low 70s, let's say high 60s, it's an attractive support zone for a buy, in my opinion. It's not
Hmm.
like I would not want to be sitting exposed like, oh, I'm going to take oil and go long and bet the farm. It's like, look, if it stays above $65, I'm pretty firm on support. If it breaks below that, I mean, there's other dynamics at play. If oil were to break down below 65, the next big level is all the way down to 55. And as we've seen before, I don't know how this happens, right? I don't know how, COVID pushes in negative pricing for oil, how we went from $100+ to $20. It's like, if that's what oil does, I want to limit some of that risk and exposure. So it's going to be defined risk for mostly, oil for me.
Definitely one of the more insane markets in the last few years, and really broaden your scope to the last 20 years. Oil's been wild, right? You had
Sure.
2008, 2009, 2014, 2015, the 2022, the invasions. Question for you, Chris, that made me think, do you trade oil futures in that case with options that allow you to define risk, uh, or do you ever consider like looking at something like XLE or individual stocks, the energy sector? For those of you guys who don't know, XLE it has a bunch of companies that oil and gas pipelines, all that stuff. Would you ever trade XLE, or would you stick to the oil futures contracts?
I would probably stick to, well, if you're more speculative, then futures contracts are fine, but just make sure
Mhm.
it's defined risk. If you want to stick to XLE, the one thing that's nice about this is the beta for XLE is pretty low. The correlation to the S&P is also pretty low.
Yes.
So, I mean, if you want something to diversify against the markets, I mean, XLE typically is stable
Yep.
versus the S&P potentially dropping, hard. So, I think it's also, I mean, I think energy exposure is a good way to limit some of that not just nonstop Nasdaq, nonstop S&P exposure. So I do like XLE from that standpoint. I mean, technically, let me take a look at the chart here. I mean, we're coming back up to the highs we saw back in 2014. So we could see, I don't know. I mean, is this a rising wedge on XLE? Maybe, right? But what I want to dive into is, okay, what is XLE made up of? What are the big top 5 holdings, 10 holdings?
Hmm.
Because the sectors tend to underperform the individual stocks. So
Yep. Yep.
I mean, I'd almost rather trade like an XOM or what's the Chevron is CVX.
CVX. Yep.
Some of the big players there, like those are fine. Those are probably longer term plus dividends. Way less correlation. So let's I mean the XLE is at 88.64. If we went to, let's go XOM here, we're trading, I believe, at all time highs in XOM, but possibly a good range trade. I mean, if we didn't go higher, didn't go lower, I mean, I wouldn't mind taking a couple of option trade stabs and see if we just stay in a range here.
Mm.
We at sitting all time highs, I'd be more likely to think that we'll stay lower for now. But define risk. I don't see there being any big clear direction outside of, can oil stabilize at $70,
Yeah.
67.50? If it does, cool. But Chevron's probably going to stay sideways. Exxon probably going to stay sideways. XLE chops around a little bit. I'm actually curious. XLE Holdings. What are the other
Yeah.
big? What are the
So,
other big players there?
um,
We have EOG, Marathon Petroleum, MPC. Yeah, so I mean, XOM is
yeah,
23.67% weight. Like,
between the
so
two top ones there, it's
yeah,
like
you're
half
40%
almost.
between Chevron and Exxon. So if you want to trade XLE, you're pretty much trading those two stocks anyway.
Yeah.
Yeah, interesting.
Yeah, and that's oil is an interesting one to me because you've had since I've even looked at markets, people have been saying, "Oh, oil's gonna be old news at some point. It's gonna go to zero," and I just don't think that that's actually practical. The not anytime soon, at least. The amount of the world still using oil dramatically goes up every year, even with the introduction of more clean energy, and which is also rising. Oil's also rising in demand too because there's just more people and more demand. And with the AI stuff, that's energy heavy. And so the rising demand for energy has been persistent throughout like humankind. We've constantly, even going back to the firewood, we've needed more firewood every year. So, something to think about. But
Yeah.
Chris, I'm going to give you the floor here for a little bit. Frank might join you for a little bit. Before I step out, I'm just going to have Chandler James, if you guys don't mind, dropping the link to Chris Pulver's YouTube channel where you can keep up with him and get the latest from his ideas. And he's also a regular contributor to the A1 Trading Show. So make sure to subscribe here and to his channel as well. And Chris, thanks for coming on. You've got the show for a little bit.
All right. Thanks, Nick.
See you, man.
All right. Bye. So let's just dive into the top down. We are down in the day. I'll just start at the top here. SPY. Go back to the daily time frame. It's not a huge surprise that we started out in red. I thought we started a little bit slower, but a couple things. Finished the month on Friday, August 30th, pushing up towards the highs. Like I said earlier, that was just a crazy rip from the August 5th bottom, and then we're fading. But really, are we going anywhere? Not yet. A lot of chop, a lot of indecision. So, wouldn't be surprised if price just stays in here for the next day or two. If that's the case, we just chop around in the middle. To me, the bears have to break below 555 on the SPY. If that's the case, it brings in a 545 gap fill to a 540 low. Let me check those numbers again. So to come back and test this level, that's 550. Come back and fill this gap around 545. Come back and find some structure here that's around 540. So if you're taking some notes, taking some levels down, watch this 550, watch this 545, watch this 535. I will be watching this level. I do have a 555 long put in for this week. I put that in this morning. And so if this chart alarm goes off, I'll look to protect it. I paid about $3, $2.95. I went out to Friday. So I'm giving myself a couple of days. And if we tap that level, I will probably generate, maybe 50 cents or $1 profit and take it from there. The other trades that I put on this morning, I just mentioned earlier to Nick. I mean, I'm stacking some trades up on both sides. So I want to see, actually, I want to test and see. I didn't get these ones filled because they were a little bit more expensive. But I was looking at an MES. This is micro E-mini futures. I was looking at a long position, but the long position gets cheaper if we actually have a pullback. So what I did get into last night is I stacked up some put orders on MES, and I will show you that right here. So let's go into /MES. And here's my November. So right now, trading at 233 and currently trading at $300. So if I do the math on that, I mean, I can show you right here. So I got in for 233 debit. Oops, a 233 debit, which means about a $5 debit. Cost me about $11.65. Right now it's trading for 30. I'll just put 302. 302, which means times 5 is trading for 50. So I'm up like $400 right now on those hedges. Could I take some profit on those? I could, but I've got time. And right now I have direction that's hopefully going to continue to behave a little bit for a bit of a pullback. Um, I mean, I don't know. I mean, if the market is going to find this level and then rip right back up to the highs again and test the all-time highs, then I could be losing some values here. But what I'd like to check on now is, since we are down about 1.25%, if my values have gotten cheaper on my call side, I do have those pending. Let me double check that. So I'm looking at this should be a working order. Should be a working order. 250 trading at 2. All right, let me see. So this is 250, 277.90. Let me see. Replace this order. I'm gonna go if I get to 275. Just debating. So we're at 277.75 on the mid. If I want to bump this up to 275, that might get filled today. I'm going to keep it at 250. I'm going to keep it at 250. So if we pull back a little bit lower, maybe even finding this like 55.50 zone on the MES or a little bit lower, then I get filled. And this makes it a little bit more cost effective to see if we can have a pullback. And then this is a February 2025 expiration. This is an 11/2024 expiration. So in the near term, I'm looking to see if the market will actually pull back. And maybe September or something like this. Maybe it's a little bit nastier and more violent than people think. Maybe it is, maybe it isn't. But I'm trading MES to kind of prepare both ways, and that's also pretty cost effective versus going out the SPY, going out the SPX, which tends to be a bit more expensive. So anyway, Frank, what's up, dude? How are you, man?
Hey, I'm good. How was your time here in Georgia?
I actually didn't make it. So when you guys were all out of town, I got bumped from I was going to get bumped from flights. The only one that looked good was a red eye flying out at like 11:59 p.m. on Friday, which would have landed me in Atlanta at like 6 a.m. Conference would have been at 9. I'm like, it's been a long couple weeks. I'm exhausted, and the flight numbers weren't looking good. It was already oversold. So I'm like, if I just go sit at the airport until midnight, 1 o'clock, and miss a flight, there's no way to get to Atlanta. So didn't end up making it this weekend,
Okay.
which was kind of a blessing in disguise because I just had a good, relaxed, like recovery weekend, which was much needed. So, yeah, how was your wedding? I know you were standing for a buddy, and then how was everyone's football weekend? Is everyone buzzing? Who ended up winning? It was Georgia Clemson, which is a huge game for week 1.
Yeah, it was a slow game at the start. Georgia ended up winning.
Okay.
And then what else happened? We saw that game. We saw USC, LSU. See USC win because I grew up being a Notre Dame fan, so our head coach had left just all of a sudden to go coach at LSU.
Okay.
And he just kind of screwed us over, but so I'm not really rooting for him. So it was nice to see USC win. Plus Notre Dame gets to play them as the last game of the season. So if they're ranked, it'll make our schedule look better.
Nice.
But yeah, this weekend was good. We went to Hilton Head. It wasn't a wedding, it was just a bachelor trip.
Okay.
It was a lot of fun. I got pretty burned out there on the beach.
Yeah. Fall asleep in the sand, did you?
Thankfully, no. That's the worst
Could have been
case.
way worse.
That's what you have to avoid when you're out there.
Exactly. What is going on? I saw your message this morning. So what happened with your you had some verticals going on the Qs. I'm seeing that volatility's up above 18, so we're definitely getting a pretty big spike today. Just single day action, which isn't a huge surprise. It's a little bit more directional for Monday than usual. We'll see if the market kind of settles in for the rest of the week. The big news, I mean, we kind of, I don't think ISM numbers are really playing a role. I think it's more like the market just kind of finished the month in August, is into September. We have some news to digest. The volatility's up a little bit. Pullbacks are probably needed or necessary before the bulls kind of re-engage. But volatility's higher, man. So curious how that plays out. I've got positions running all over the place, but curious what you're looking at today.
Yeah, today I'm looking at another setup. I want to take another VIX long. Looking at probably and I just took the loss on that. It was about $1.50 trade. It was a debit.
Okay.
So that was a loss. The Q vertical I had ended up being like a break even because it didn't really move. It just kind of went nowhere. So I ended up like not losing money, which was nice, but it was disappointing because the past 2 weeks I've been expecting volatility in the Nasdaq and nothing has happened. It's just basically has been unchanged. And then today's finally a move. But yeah, I think honestly, I don't think I'm gonna be looking for leverage long plays or anything like super bullish, just because this month we're entering like a very historically bearish month.
Mm-hmm.
I'm looking at, it's kind of getting long on the VIX and looking for short opportunities here.
Sure. Well, I had a couple of assignments that I had to repair last week on, I think it was Friday, because I took the earnings plays, NVIDIA, Salesforce, and CrowdStrike, and 2 of the 3 got assigned, so I had to repair those. NVIDIA is actually in profit right now, my 112 by 113. Right now, that shows I can close that out. I collected about $1, or actually no, I collected, want to say 75 cents, and the dollar's trading for 45 cents. I'm just going to let this one run for the week and see if NVIDIA continues to drop lower. If NVIDIA goes lower, then this will give me a full 75 cents. The other one I closed out was a minus 25 cents, and that'll look for some net profit this week on NVIDIA. That expiration is Friday. If I go to CRWD, go back into this position here, CRWD. This one is still doing its thing. It's right in the middle. So this one collected 350. I'm risking $1.50 max. I need to see if CrowdStrike will go somewhere else, but no assignment on that one. CRM, I'm still sitting with a 240, 250 by 245 bear call spread. That right now is, I collected, I think on this trade, what I collect in this one, 370. So I collected about $1.85 right now, trading for 210. So those are, I mean, NVIDIA is in profit, but I'm going to try to let it get into full profit. And then I'll see if CRM and CrowdStrike also do the same thing. Some of my, I want to take a look at that MES play and also my SPY this morning. So we're trading at 556 on the SPY. I've got a chart alarm set for 555. I got a gamma level at 554. If I float this down, these are all starting to fill up for the morning, which isn't a huge surprise. So if we're going to fill up these levels here, just continue to leak a little bit lower. If Monday's going to be another strong directional day, this blue box is actually the start of the larger gap from that 550 zone. So if I zoom out, let me go to the 15-minute chart. So I do like this area as, pretty noticeable gap fill. You can see all that indecision that we've had since like the 555 lows, multiple times tested. This is on the 22nd. This is on the 28th. If we're testing that again today, that's really the make or break for this range. If we can hold 555, we stay range bound. If we break 555, bring it on to 550 or lower, and hopefully that some of my either MES, which I mean I might close that thing out super early, Frank. If we are down to levels that, let me just go to this feed here. If we're down to levels that I think are, profitable enough, and I just have so much time left in the trade, I might take some profit in here. So, who knows, man? September in 2023, did have a decent pullback. This is 2023, right? We had a decent pullback from late August into September. 2022, of course, we were still in a bear market, so that was obviously a pullback zone. I don't know. I mean, seasonality wise, like September can be pretty nasty. This peak to trough in 2023 was around 11.4%. And so if we even come close to doing something similar to that, we might see a high to low of, 10, 11% and do the same thing again. I mean, I don't know. I'm spitballing here, but maybe we have something like that for the month of September, and we have this decent correction that the market's going to try to justify, some type of rip higher for the end of the year. But
Yeah,
anyway, that's just thoughts.
I think what I'm gonna do is look less on the long side. So instead of taking like a bullish vertical or like a debit spread on the indices, I might try to do what you're doing with the credit spreads and just try to collect premium that's out of the money. And I think I might go more short term though. Instead of like a month out, I might go like maybe a week or something.
Yeah. Just check the premium. So just check the premium, right? Like I don't know. I don't like the 10-cent risk 90-cent credits. I mean, if you only go out a week or so, you're not going to get a lot of premium for it. So I'm willing to, kind of set my levels. And that's why last night, I mean, I'm looking at this MES and I'm like, it's really not that expensive. Like I'm risking, if I'm dead wrong, I'm risking about $1,000 right here and about $1,000 right here. But the upside is I didn't have to cap my trade and have a sell side in to lower the cost and also have that sell side that will fluctuate price. So if I'm right in any capacity where this is going down, I can probably generate a couple $1,000s on that stack put option. And part of me hopes that we go fast enough and far enough that I just start moving stop loss as opposed to taking profit. So I'm looking at this as there's a lot of potential here. If I get a couple $1,000s of profit, I might just move stop losses and protect it. But I think for right now, either if I hold on to it for this level, I'd be pretty happy with that spot for some short-term profit. I do think it's possible that we may come back down and revisit the lows, but I think that's going to be way scarier for investors to have that that level, tested. If we retake that August low, I think the market's going to be a little jittery as far as trying to justify these highs again.
If we do test that low, this is why I like the VIX trade. So if you're doing a vertical call spread and you wanna go out in time, like I'm looking at August or October 16th. If you were to buy a call in the money, like at 17 or 18, and sell a call out to like one of the levels that it touched back in August 5th. So that went up to 65.
Yeah.
If you were to buy a call at 18 and then sell one out to 60, that's however many points, I don't know, 20, 30 something.
That's 42 points out. If you do an 18 by 60, that's 42 points.
It's hard to do math on the spot, but if you were to do that, it costs like $2.
Right.
So you could be risking on one contract, it could be $200 for a potential 4K reward. That's if price does test those lows again. So if we don't really go anywhere, or if we fall hard but really not as hard as we thought, so if we don't go test those lows from August, we'll still see some appreciation on this vertical play. So we could see, I guess, maybe up in the 20s, which would still get you into the profit zone.
I think you're better off, Frank, versus going out to 60 and make it a vertical. I think you're better off just eating the 30 cents and just paying 33 extra dollars or whatever you're doing. Like pay the extra 30 cents and have no cap on the upside. Because if you sell that, what will absolutely happen is, let's say that price does go up. If price goes up, meaning it's moving up this scale, so this is 35, 36, 37, 38, goes all the way to 60, the values of this will change and it will definitely affect your sell side. So I'm not saying that you can't get more profit for it, but for the difference of maybe 30 to 40 cents, I think it's worth just paying the 30, 40 cents and taking away the cap. Now, instead of making $4,000, you can still make it without having, you can get out of it whenever you want. Like if the market's going to spike up on the VIX and elevate back to 30, 35, or 40 again, I think you can take that profit whenever you want to, as opposed to the values of your 60 changing.
Are you talking about buying, just straight up buying the call?
If you're talking about an $18 strike, I mean, just straight up buy the call. I mean, if you bought it for 233, you don't have any upside, or you have no cap on the upside. So now to get back to even if it gets from 18 to 30, so you get a $12 move, you paid $2 and change for it. I mean, you still have $1,000 of profit if we spike up to 30 on the VIX, roughly, right? So I'm just saying, like, I think this
Well, that is a
actually
good point.
is good. It's just not that much of a price difference. It'd be one thing if I was like paying, okay, I've got to pay $5 for the $18 call, but instead I'm paying $2.33. If I put on a debit spread, I pay $1.95. So to me, that don't cap the upside. I think that, you know, I mean, this is the first high that we've taken out in weeks. I mean, this is the 22nd. This is the 28th. We're pushing above those levels today. I kind of like that we're going to get elevated. I mean, anything above 15 is considered medium. 15 to 25, I think 17 plus is pretty decent. But I don't know. I want to watch. I mean, look, even if we and this isn't really a technically sound, you know, thought, but if we go from high to low, I mean, even if we pulled back in this to some type of high, low, and then just a little recovery, right? Like let's say this gets into the mid to high 20s. That is enough to, you know, scare the market down a little bit, and that's enough to get VIX and volatility instruments to elevate a little bit. I don't think we're going to have this. I mean, I don't think we're going back to 60 because that caught everybody off guard. That was like the instant perfect storm of deleveraging Japanese yen, plus the SOM rule, plus all the stuff happening over the weekend. I don't think that necessarily happens again, but I could see us going from, you know, 15 back to 30, go back to 15 to 30. I mean, and I say that because a bear market that we experienced in 2022 was between about 20 and 35 the entire year. So if you want volatility, the market can certainly sell off aggressively, and the VIX never has to go up to 60. I mean, this is more of an outlier than it was anything else. But we can stay in a correction and have volatility between, you know, 20 and 30. So I don't know, just thoughts. I mean, if you're only going to pay 30 to 40 cents more, we get to the high 20s or 30s. I think that's a good play in the VIX, man. The VIX is a tough instrument to trade because, I mean, okay, if you are willing to take calculated risk, I think a trade like this, if I did the 18, 20, and 22, you know, I mean, am I going to pay $6 for this? And if it spikes up to 30, I try to take some profit. It'd be like, you know, get some contracts in, stack them up, or just take one trade and do a couple of contracts. You know, you're risking, let's say you're going to risk $500 here. It's $460 if I'm wrong. But if I'm right, you know, we spike up to 30. You can probably turn $400 and some dollars into maybe a $1,500 profit, maybe $2,000 profit on a VIX hedge. So
yeah,
it could work out.
I guess the only question is if it just really ticks up, if we just kind of breach 20, we go to like 21, then your call, I guess, will be in profit, but say that's like close to expiration, like how would that be in value versus like a VIX or a vertical play? So if we're looking at a slow trend upward on the VIX, which is not really slow, but it's just choppy up and down.
We don't have a slow trend in the VIX. Like rarely do we see this thing. Like, I mean, I guess this happened. Like this is, I'm trying to think, September 2020. Okay, so we had our September correction in 2023. We went from 13 to 23. That would be a slow trend. Now you told me you're talking about an October expiration. I mean, if you put it on now, remember you're coming off of these lows in volatility, which I think is a good spot to be considering a long VIX play, you know, or a long volatility play, at least in the interim. But I would say that 24 to maybe 30 is probably your targets. I mean, you can always move stop losses, right? I mean, if you're long call and you're up from a 230 debit to $4, $5, you can move the stop loss to break even and see if it does go higher. But this instrument reverts so quickly that we could get up to 25, and then one day we could be down to 18 again. You know,
Yeah.
like all it takes is one ripper day where it's like the market's beat up by 3, 4, 5%, and then all of a sudden we have one big like 2 to 3% recovery day. The VIX can get smashed by, I mean, this thing could be down 10 to 15%. So it's just a tricky trade. Give yourself as much upside as possible. Take the calculated risk. I wouldn't be surprised if we get into the 20s, especially if we start breaking down some levels. I mean, from the close, I'm just talking SPY right now. Close at 563 and change, down to 555. I mean, my gosh, dude, we're almost down. That is almost $8 from Friday's close. That's a lot. I mean, we got a pretty decent turn on the day. And
well, let me ask you something about just the indices.
Yep.
Do you think that within this month we are likely to hit all-time highs again?
I don't know. I don't think September is that month, man. And it seems we never know what's going to happen, but it seems easy to say that September and the seasonality of it, like today is almost reinforcing it, that today's pretty big route on a Monday is going to make it pretty difficult for the rest of the week to start ripping higher. I mean, what I could see is that we don't necessarily breach this low and the rest of the week spends time in here. Now, do you think that non-farm payroll is enough to justify this market to get all excited about going higher? Is employment news enough now to drive the market? I mean, we just had, like there's no real earnings catalyst. The Fed's likely going to cut. All these things are baked in. I don't think that the jobs numbers, look, the jobs numbers that were unemployment better, things got better, recovery was here. I don't know if a steady or solid non-farm is going to be enough to be like, oh my gosh, we're going to all-time highs. I don't think we're there. I mean,
you're right. I guess there's other things to consider too, is that if we have a blowout NFP, like if we go way past the forecast,
let me check here.
Will that cause the Fed to backstep and say maybe we should hold off on the rate cut? Or do you think they're pretty set?
I think September's pretty set, but of course we can always watch the CME watch tool, right? If we have a blowout NFP, I don't know how the Fed's gonna. That would drive me crazy, and it'd probably drive the market crazy. If all of a sudden we had a blowout NFP, like 250, 300,000 jobs, and the Fed would be like, yeah, we're not going to cut now. It's like, I think they have to cut. I think every central bank right now is. What's that?
You can't trust the NFP report because the revision could come back as like 130 instead of 250.
Right, and to that same degree, the NFP report that was a big miss here for the 114 print. This could come in positive. Look, we could come in and print 165 here. We could have a revision to 120.25 here, but does it matter? I think honestly, the bigger number is going to be unemployment rate, because remember, this is what triggered the SOM rule. When we hit 4.3, that was when the 3-month trend was over the 12-month low. And so that change, that like half a 1% change over whatever period it is, that SOM rule was triggered, and that's what led to the additional sell-off and with the Nikkei drop in the way that it did. So I think this Friday, probably the bigger number is going to be, this has to be
employment rate
for low. Yeah. Non-farm can be steady. I don't see us necessarily whiffing and having like, oh, we'll be negative 100,000. It's like we'll probably have something positive, but I think the unemployment percent and the rate is going to be what the market's going to be more sensitive to, for at least Friday. But I don't when it gets to higher highs, man. If we're sitting here, I'm staring at the market all day today to the downside. Yeah, my 555 is lower. Let me check my SPY right now. I have the SPY running, and I calculated the debit. So here's my $3 debit. Let's go into. I just got to keep an eye on this because I might take some profit. So I've got a 555 put right here, and so my $3 is up to $4. That's fine. I could move a stop loss and just let it do its thing, let it kind of bleed away all day. But it's like, do I just take the profit? I guess more than anything, maybe I need to look at the MES. I think that's probably where my better hedge is sitting. Like, it's silly that it's like I took the trade last night, and I might be like looking at getting out of the trade right now, which kind of seems nuts. But
which play is this again?
This is the micro E-mini futures. So I got into all three of these stacked put positions. And right now, so I got in for 233. And right now they're trading at 320. So I'm already up about $500 and change of profit. It's just not quite enough. Like, I mean, chart alarm just went off. NDX crossing 19.2. I mean, the futures market is, I should have just traded futures this morning, man. This was a crazy drop. 56.30 down to 80. That's a 50-point move on the S&P futures. The Nasdaq's way more volatile. I mean, that's 470. That's a 240-point move on the Nasdaq futures. So that would have been the much easier sell trade today. So everything, I mean, this is dropping fast, dude. Nasdaq's down over 2%. S&P down 1.4. Dow's down. Russell getting smoked right along with the Nasdaq today. So it is an ugly day, my friend.
Here's something that I want to look at to your point about unemployment claim or unemployment rate.
Yep.
So I pulled it up, and if you were to look from January of last year, this trend has been nothing but steady upside. And if you look at NFP, it's going to be all over the place. But seeing unemployment go up this harsh in the span of a year, that does seem concerning. I don't think that even if 4.2% isn't, I don't know if that's relief yet. We're still above 4. So,
well, by comparison, though, we are so far on the low side of unemployment. There's so much worse that it could get. I mean, it's like I'm going to see if I can find. Let's see if I can find this here. So unemployment rate. Let's see if that gives us some history. NQ crossing 19.2. We're at. All right, I'm trying to get this 555 to hit. Let's see if this will show me. So total employment. I'm looking for unemployment rate. Let's see if I can find that. Let's see how far back we can go. So let's go max. All right. What is this? Employment rate. So I want unemployment rate, brah. Fudge. I mean, this is what I'm going to look for, Frank. If I can find the unemployment rate historically, it's going to look something like this. We've had peaks and valleys, but we're sitting here like even though we've gone up higher, 4.3% by historical standards is still very, very, very low. When we've had the worst of times, I mean, if you go back to 2020, obviously we spiked into, I think, double digits. We got into the teens, didn't we? And then if you go back to 2008, we got into like the high, like 7, 8, 9% unemployment. If I go to, I don't know how far this chart goes back, but let's try unemployment rate right here. How far back can I go? 2014. Let's go way back here. Way back here. So it looks like I can go back to 2000. So, all right. So we have a, stock market.com bubble, unemployment rate, even slightly after that in the 5s, 5 and 6. Great financial crisis. We get into 10. We work our way out of that for a decade, have a COVID spike. I mean, this kind of shows my point. Like, yes, we've been trending higher. I get it. It's not looking good, for this trend to continue. But from a historical standpoint, we're still, we're well off of like the 5, 6, 7, 10% where it's like full on crisis. I don't know.
Yeah.
I mean, I just don't think the employment numbers. Look, the market's sensitive to it, obviously, but I think it's sensitive for the fact that it's triggering the recession. These are like undefeated indicators when it comes to, calling a recession, triggering recession. It's right around the corner. And we know you can stack up all these reasons for the market to be bad, right? Or for the economy to be bad. Unemployment's ticking higher. You have the Somme rule in effect. You got the inverted yield curve. We're looking to come out of that. You have bankruptcies, corporate bankruptcies, personal delinquencies, student loan debts. Like you list all these things. It sounds awful, but I also think about the contrarian side of all of this, which is if everybody from Main Street to Wall Street feels that we're going to have a recession, we probably won't have one. And so what I think would be the difference is maybe it's a Main Street recession, but Wall Street, we have like the irrational capitulation move because the Fed's cutting and all this money is like just going to get tossed in for one more final, I don't know, for one more final run, and it's going to make 0 sense, is going to be completely irrational. But as we get to that final blow off top, that's when things get really bad after it turns. So, I mean, if I'm bearish now, it's like I'm bearish in the near term as opposed to long term.
Gotcha.
Yeah,
So
that's just my thoughts.
basically what you're saying is you're not too comfortable getting a fully bearish scope until you
No.
see hyper bullishness. And honestly,
Yeah.
I agree with you. But will we see that is the question, because we got up close to all-time highs again, and then it's reversing once more.
Yep.
We have the Fed decision coming up at the end of the month, and if they cut, is that even necessarily a good sign for stocks? I don't know. There's a lot to talk about, which we'll have to do later because we have James coming on.
Time flew by once again. Oh my
Yeah.
gosh.
But
All right.
hopefully later on in the week, I'll have more of an idea for how I want to trade this on the VIX and the indices. So
let's continue to unpack this during the week. So I'm actually heading out to Florida today. I'll be in Jacksonville tonight, tomorrow, Thursday. So I'll be working remote from an office there. But I want to continue to dive into this because, look, I'm like I said, I'm positioned both ways. We're probably in a bit of a chop fest right now, and I'm gonna leave. So just before we go, I'm gonna leave my 555 available to see if it breaks the floor this week. If it does, then we're on a quick move to the downside. If we activate my chart alarm, I'll probably look at taking some profit, moving stop losses. But I want to give it more than just today. It's like if I just did a 0 DTE, then I would be out in profit already. But I'm going to see if we break the floor, maybe pull back a little bit. If VIX is higher, everything's kind of selling off. This is a pretty respectable move to say, hey, look, nice try in August, getting all the way back towards the highs, but we're not quite there yet. And so really the rest of the week is going to hinge on non-farm because ISM numbers, nope. I mean, it's not really going to be a huge deal. We have ADP, which will be a precursor. We have unemployment claims on Thursday, and then non-farm, of course, on Friday. So how it all shakes out, we'll find out. I think the market's going to pull back. I'd like it to. September's never a good month for the market, and sitting here near these like rich valuations, I could see the market pulling back. But to your point, I'm not super bearish right now. I'd welcome a pullback into this area. If the bulls are going to be activated, that's probably where the bears are likely to step up as opposed to just keep grinding higher. So I like this zone here, but we could potentially have high, low, lower, high, lower, low, and that's a good position to be long. It's just I don't know if we go gangbusters to 600 or 6,000 on the SPY or is it the S&P. So, all right, man, let's unpack that through the week. Thanks, Frank. All right, everybody. Enjoy the next session.
Yep.
Bye.
Thank you.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How are you guys doing? Let me just move that back. There we go. Hope you're all having a good start to the week. Let's see. Hi guys, I just tuned in. Please, can you look at euro pairs? Yes, actually, I was looking at euro dollar this morning. Put out a video on my YouTube about it. So what I'll do is I'll run you through it. So I'm in some euro dollar sells. I'm in the first position here at 1% risk. I'm looking to get in again, slightly higher at another 1% risk to round off my risk at a total of 2%. So that's generally what I go for. That's my standard risk amount. Stop loss above these highs, and we also have a target down here at 1.06. And you might notice that there is a credit agricole note here, and that's because what I can do is show you right here. We've got Credit Agricole. So this is from the institutional report on the 30th. Credit Agricole is in short positions on euro dollar, and you can see their target is 1.06. So if we replicate their take profit level, which is down here, then yeah, looks quite good technically. We've also broken previous lows. We've got a level of structure here for the possible break and retest, which is why I've got a second entry planned. So I'm looking for something along these lines. So a slightly higher move to retest, and then a continuation to the downside. There is also the fundamentals behind this trade. Let me find them here. So euro dollar short, we've got inflation and ECB policy. Eurozone headline inflation is declining and core inflation is only marginally increasing. Lower than expected inflation data from Germany and Spain has led to dovish expectations for the European Central Bank, increasing the likelihood of rate cuts. Eurozone flash PMIs show mixed signals, with manufacturing, contracting, and services showing resilience but slowing momentum. Weak GDP growth estimates and disappointing economic data from Germany and Spain further weakening the euro. The Bank of America Bull and Bear indicator indicates neutral sentiment, with market hopes for Fed rate cuts being as bullish as it gets. If the ECB proceeds with rate cuts while the Fed remains cautious, the euro could weaken against the dollar. So that's the euro. In terms of the dollar, I think we're going to get the 3 cuts of 25 rather than an aggressive cut of 50. So that does leave me with a little bit more hope for the dollar in terms of it not just dumping off a cliff. There is also the seasonality behind euro dollar, which I can pull up right here for you. So if we look, this is historical data on euro dollar for the past 10 years. If we take it from, the 4th, which is tomorrow, until sorry, 1 second. Yeah, until when is this? So the 3rd of October, roughly, we have a pretty serious decline during this period. So it's actually from sort of the end of August until the start of October. Historically, very bearish. It's almost a 100% rate. We've got, if you were taking long positions, so if you took a long position from 23rd of August until the 3rd of October, for the past 10 years, you would have lost every single trade. So having said that, if we were looking to short, we would have won every single trade. So just going off the historical data, this also backs up this position. So it looks quite good so far. As I said, I've got about half of my normal risk on this one so far, just to see how it runs, and then I'll add on if we can see a slightly higher price. Does that make sense, guys? Let me know if you're confused at any parts. But yeah, so I'm aiming really for this sort of 12th of September. That's when the seasonality sort of kicks in. Next thing is the dollar Swiss, and I can show you the same thing again, actually. If we go over to watch list, dollar Swiss. So you can see here, from the 25th of August until, we'll put it here, so it'll be the 4th of October. Really strong bullish, similar situation. If you were buying during this period every year, again, you would have had 9 wins, 0 losses. However, it's now the 3rd of September, so it'll be from here. So again, due to the seasonality of this, the historical data, upside looks quite convincing, and price action wise also looks pretty sensible. Really, we've got a really strong level of support throughout here. So now I'm just looking for a pullback to roughly this 50% level of the recent high and low, and I'll be looking to take a pretty short-term trade. I'm not looking to take this too high. It'd be more a case of having possibly just to take profit at the previous high up here at around 0.87. Stop loss would need to be quite tight on this one, so it would be probably just under the most recent low at 0.839. And that's pretty much it for this trade. There's not really too much in terms of economics behind it. It's more of just playing off the potential dollar bullishness that we might get as we see some repricing with Fed cuts and things. XPD USD. You guys always seem to pick markets I don't trade. I have no idea about palladium. Not a clue. Commodities are down today, quite seriously. Actually, I was stopped out of my gold position at break even, which is completely fine. My copper position is also down quite bad as well at the moment. But yeah, it seems quite interesting actually at the moment. So how much are we down today? Let's see. Well, it's quite large actually. We're down 4.61. Down 4.61% just today. Daily is quite clearly in a downtrend. Actually, we've been holding underneath this 200 moving average for quite some time. Actually, when was this? 2022. So yeah, pretty strong downtrend. To be honest, there's not really much for me to look at here. It's really choppy. I suppose there is sort of an uptrend here that's actually just been broken, but yeah, there's not really anything here, technically anyway. But yeah, a lot of the commodities are melting today. Actually, let's see gold. Yeah, so my buy position was it was off here. So I was barely stopped at break even, but that's completely fine. I would quite like to see gold come lower. And again, actually, I'm gonna pull up seasonality one more time because gold is very bearish during September. Here. So if we look from September the 3rd until around the end of September, so basically the whole of September is very bearish. We have the same thing. If you were taking long positions during this time for the past 10 years, you would have won nothing and lost 10 trades. So yeah, and especially with NFP and unemployment coming out, we've got quite a busy week in terms of news this week. So not looking to really try to actively trade. I'm more happy to watch what the results are and react accordingly. But yeah, in terms of levels on gold, it's a bit tricky to try and determine because we are at all-time highs. Well, just under all-time highs. So yeah, it'd be more than realistic to say from here we're having a profit-taking dip and seasonality. We have Fed cuts coming in as well. So yeah, looks a bit messy. Pound dollar, looking to get into long positions. This one would be more of a hedge because, as I said, I am in short euro dollar, looking to get long dollar Swiss. So I don't want to overexpose long positions on the dollar if I am in before we have NFP come out. So I'd be quite happy to take a long position on the pound dollar. As I said, as more of a hedge. The technicals look quite nice for this as well. I'm fairly sure it's historically bullish as well in September. So yeah, I mean, very typical sort of trend following here. I'm waiting for gold to get to the weekly fib. We had a huge weekly rejection. Let's see. I've not checked the weekly on gold actually. I mean, it depends where you're talking about, but it might be around here. So I assume you mean, yeah, through here actually does make quite a lot of sense. Let me just drag this in a little bit. Let's see on the daily. You know what? Actually, that does make sense. I wouldn't be too mad about gold going down here. The thing is with this as well, it would also allow the 200 moving average to catch up. If we could come down to this level, we'd see sort of a continuation here of that's a bit extreme. So something along these lines here, and this would sort of clear a lot of this gap that we've got with this 200 here. So it'd be sort of a reversion as well. Which I think is quite good. We've just covered euro dollar, literally 3 minutes ago or so. So yeah, go and feel free to rewind. Just gonna check. Okay, there's no live stream schedule. Oh, there is. Okay, so I'm last on today, so that's fine. I'm not long dollar Swiss. I'm looking to go long dollar Swiss. So on the H4, I don't know why I'm using that. Use this here. So yeah, I think I might have missed the entry here, but I'm looking for this 50% retracement off the low to the high. But again, it's one of those things. We do have a quite busy week, as I was saying, so it's kind of more just sat on my hands. I'm not too interested really. If I can get triggered, if this level is met, I'll execute. But if not, then completely fine. It's less risk to go into news with. But yeah, not in that position right now. The only positions I'm in are Euro Australian, Euro Dollar, Pound Yen, and Swiss Yen. So Euro Australian is in drawdown at the moment, but I'm still quite happy with the position. So it was actually quite an aggressive entry, really. We entered off this bearish H4 candle when we had the second wick to the upside. The idea behind this is looking at the fib. So again, rejection off this 0.5 level, which is why I entered. We've also got the moving average cross, which is a signal for a trend change. We've also had the break of this level of resistance through here. So now I'm anticipating the break and retest. So we've obviously broken, now looking for maybe a slightly higher price to retest this level, and then a continuation to the downside. But yeah, price is still holding below this 200 moving average. So it looks fine so far. Drawdown is one of those things. Sometimes you've got to sit through it. And in hindsight, the entry was quite poor, really. But, sometimes that's just the way it goes. I'm only looking to take dollar Swiss to the daily fib, though. Your move's kind of big, isn't it? Yes, exactly. My move is quite big. That's why I'm not too bothered if I get in or not, because it's, taking it into news, it's quite high risk. Coffee, do you trade? I don't trade coffee actively. I don't even think I've got it on here. No, I don't. I have a commodities trader that works at Elite Traders. He trades coffee and orange juice and corn and all those things, but it's not my forte. I'm currently researching, so I'm trying to educate myself on a lot of the commodity side of things and energies, but it's it's quite difficult to dedicate time to learning deep things like that when you've got a lot of other things going on. Let's see, Pound Yen. This one was quite frustrating, actually. I entered this one once we had a break of resistance here. I was, still quite confident the pound can recover the majority of this move that we've had on the Pound Yen. The issue is the yen seems to have spiked so far in this trade. So you can see the pound is still dropping, which is completely fine, and the yen seems to have gained some strength today. But yeah, I mean, we'll see. Not too concerned about this trade yet. It's more of a longer term position trade. So if it's stopped, it stops. It's not an issue. Yeah, euro dollar looks good, though. It's a shame that I didn't just put a standard 2% on here. I'd be happy to hold. So yeah, we'll see how this goes. Yeah, there isn't really anything that I need to cover today, or anything that's changed. Let me see. Let's have a look at the Edge Finder and see if there's any interesting things. It's actually not really. Pound Australian's bullish, New Zealand dollar's bullish, Australian New Zealand bearish, pound Swiss bearish, Australian dollar Swiss bearish, pound Australian. Let's have a look at that. So that's actually quite good. I'd love to see a move higher on pound Australian up into this fib level. This would also meet this previous resistance quite nicely through here. So it'd be, yeah, quite a long-term trade actually, but it needs something to drive it higher. And if the economics are in favor of it being bullish, then that could be the could be the motive for it to go a little bit higher, but not really looking to get long. Did you go over USD JPY? I just entered a long. Yeah, we can have a look at dollar yen. Yeah. So yeah, I've been in dollar yen for a long time, since July, the start of July. I've been in dollar yen. It's been a bit of a rough ride, to be perfectly honest, but it's fine. I thought my computer froze on, but yeah, it's fine. So again, I'm looking for a slightly stronger dollar, and we're actually approaching the 102 level, which would be quite nice if we could break that round level. The next factor for the dollar really is, if we do break 102, then we're going straight into the fib. Now, if we can break above the fib, that would be beautiful. However, I'm not too certain we will. So we'll have to see about that. However, long term, dollar yen, I don't really see any reason it couldn't continue to the upside, at least a slight correction. So far, we've not really seen much. We've seen, just realized my fib's drawn in the wrong place. We've not even seen a 50% correction yet, which gives me a rough idea that we might get back into sort of this level here. So around the 151, 152-ish, sort of around that area. Once we reach this level, I'm getting out. I don't really care what happens with dollar yen, to be honest. It's been one of those trades I've been in for that long. I just want to get out. So yeah, I've got 1 scale in, 2 scale ins, and 3 scale in. So 1 position down here to offset the 2 losses. Gold, we've covered gold. We can do CAD Swiss. Okay, let's see. I'm not sure what's going on there. So CAD Swiss, let's see the daily. I mean, downtrend since September 2022. As a trend trader, I wouldn't be looking to buy. The only factor I can see here to really support buys is if you were looking for a reversion trade. You're 3.5% below the 200 moving average, which is quite large. Let's see what we were sort of here. So this was 5%. So I suppose there is still potentially some room to the downside. Yeah, I'd be looking just to get into sell positions. So really, let's see. Suppose this area here would be sort of the sell zone. Allow price to come up a little bit higher, retest this previous support, and then maybe a move to the downside from there. This would also allow 200 moving average on the daily to catch up. And then, yeah, maybe we look to go something like this. But yeah, definitely wouldn't be looking to buy this market at the moment. Soy, bean, corn, and wheat futures. You're asking the wrong guy. Unfortunately, I'm just a simple G10 trader. So that's fairly short. Yeah, Australian dollar yen's taken a bit of a hit this morning. It's actually just rejected this 200 daily moving average. Euro, Australian. Yeah, I mean, thoughts on Swiss yen? Yeah, so we're in Swiss yen. It was a signal that was sent to the Discord. It's more of a long-term trade. This isn't a quick trade. We're looking for just a 1 to 2, and we're looking to essentially correct the whole of the sort of pre-intervention, pre-hike move. The economics actually support this trade quite well. The problem is we're just not seeing any momentum. We've not really moved since we entered. We had profit, drawdown, profit, drawdown, profit, and now we're essentially just back at entry. So really, we'd need to see quite a nice break to the upside. Although, really, This range is slightly trending up higher, but it's not really anything to shout about. It's a bit boring, to be honest. Yeah, the markets are just so blech at the moment. Your opinion on NAS? I think we'll see quite a lot of volatility after Friday. Once investors get more of an idea of what they want to do in regards to the Fed, and when they get more of an idea. But at the moment, I think there's a lot of sort of waiting around really in the markets. It's not so much as active. So Nasdaq, I actually quite like where Nasdaq is at the moment. The RSI is oversold. Quite a nice level of support. I wouldn't be opposed to buying. Maybe if I know, it would have to be after the NH4 candle closes bullish off this level. If we can, then maybe a position back to the previous highs. Stop loss below this sort of wick here, just to allow price to have some room to play around. But yeah, I think that's about it. I don't really see much else going on in Nasdaq really. Although I did see an article actually a couple of days ago saying that a lot of the, I think it was JP Morgan or Bank of America, I can't remember exactly which one. It was one of the quite large institutions. A lot of their clients are actually shorting the indices at the moment. So they were basically selling all of this move, which I find quite interesting. So we'll see how that plays out over the next couple of weeks. Any thoughts on the Nikkei? Let's take a look. I'll use an area. I mean, long term, I only buy indices. This is the wrong chart, I've just realized. Let's do GPN 225. There we go. Let's get rid of that. Do candles. There we go. Back to how it should be. So yeah, I only really buy the indices markets. I'm not looking to go short because normally you'd be, counter trend trading overall. So if we look, the overall move of this market is to the upside. So let's see what we've got. We've got the EMAs here that have just all crossed, which is actually a really nice factor. Rejecting the fast moving average on the daily, which is the 200 on the H4. So yeah, I actually quite like this, maybe for a buy opportunity through here. Let's get rid of this box here. So it'd be similar situation to NAS. If we can get a bullish engulfing candle off this level of support, maybe going for some longs as we are looking for a slight recovery in the Japanese index. But yeah, again, I wouldn't really be looking for sells. So buy position off here is kind of the only thing that makes sense to me at the moment. Let's see actually if this is the fib. So yeah, we've broken, actually that looks quite nice. We've broken above the 50% pullback and the 0.618, and now we seem to be holding above and using this level as sort of a resistance, which I quite like. So I'll keep an eye on this actually. But yeah, anyway, guys, I think, Brian, my name's James, I'm not Nick. I think I might call it a day here. It's been quite a short segment for me. But yeah, there's just nothing to speak about really. Let me just do one final check. Yeah, there's just nothing here. So guys, again, sorry it's been a bit of a short one on my side. Normally I like to do them a bit longer, but there really is just nothing else for me to talk about, and there's no point me sat here talking about nonsense for the next 20 minutes. So I will love you and leave you. Have a great day. I'm sure I'll be back on at some point this week. But yeah, I will see you later. Thank you for being here. You've been a great chat as always. I will see you later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.